Needless to say that Schwab Dividend is one of the most popular dividend ETFs in the market, with nearly $50 billion in assets under management. This is especially so for investors who want to build passive income because it has growth potential, a solid return, and strong dividend growth. SCHD is a good long-term investment because it gives buyers a diverse and low-cost choice for both yield and dividend growth. Over time, the power of increasing dividends through SCHD can give you money that can change your life. This is why I'm saying that by investing in an SCHD ETF, you can enjoy the benefits of passive income, capital appreciation, and diversification. As ambiguous as this might sound, there is no one-size-fits-all answer to how much money you need to retire. It depends on various factors such as your lifestyle, expenses, and retirement goals. However, investing in an SCHD ETF can be a good option for retirement planning. SCHD ETF is a low-cost exchange-traded fund that invests in high-quality U.S. companies with consistent dividend payments. It has a dividend yield of 3.2% and an expense ratio of 0.06%. While it is important to have a diversified portfolio, investing in SCHD ETF can be a good starting point for retirement planning. If you want to retire easily, putting $100,000 into an SCHD ETF could be the best choice for your life. Here's why. Dow Jones, a U.S. Dividend 100 indexer, is made up of 100 high-quality U.S. companies that have paid dividends for at least 10 years in a row. SCHD ETF is a low-cost fund that tracks the success of this index, and you don't have to pay a lot of fees or charges to buy into SCHD ETF and benefit from the growth and security of these companies. It pays out $3,200 a year for every $100,000 put into SCHD ETF, which is called its dividend return. People who are retired and need to pay their bills can get a steady income from this. The SCHD ETF also has a low payout ratio of 51%, which means it keeps enough of its earnings to reinvest in its stocks and raise prices over time. If you want to keep your profits as low as possible after taxes, the SCHD ETF is also a tax-efficient fund. Being that it only trades its stocks every 13% of the time, it doesn't have to pay capital gains taxes on its income. There are also eligible profits from SCHD ETF. For most owners, these are taxed at a lower rate than regular income, and you can get low-cost, high-quality, and tax-efficient investments by putting $100,000 into an SCHD ETF. As you must have seen by now, SCHD ETF is one of the most popular dividend ETFs in the market, with nearly $50 billion in assets under management. However, there are other dividend ETFs and individual stocks that can also offer attractive returns and income for investors. Now, let's pair SCHD up with other high-yielding ETFs or stock investments and see how well it does. Another dividend ETF that invests in high-yield dividend stocks is VYM. It's similar to SCHD ETF in that the cost-effectiveness of both ETFs is very high because their price ratio is only 0.06%. When it comes to income return, VYM is better than SCHD at 3.4% compared to 3.2%. While SCHD only has 100 assets, VYM has over 400, which is a bigger and more diverse collection. When choosing stocks, SCHD, on the other hand, looks at things like revenue, cash flow, and dividend growth. This helps it have a better portfolio than VYM. The technology field is more important to SCHD than it is to VYM, which means that SCHD has more growth potential. SPHD is another dividend ETF that focuses on stocks with high yields and low volatility. When it comes to income return, SPHD is a bit more prominent than SCHD with 4.97% versus 3.2%. But some of the profits in SPHD can be lost over time because SPHD has a higher cost ratio of 0.30%. Also, SPHD strategy isn't as good because it doesn't look at things like income growth or profits. Another thing that might limit SPHD's growth is that it's less dependent on the technology sector. Investing in individual stocks is another option if you want to make your portfolio fit your needs and tastes, because it may give you more power and freedom than investing in SCHD ETF. But the offside is, it does take more study, analysis, and tracking to invest in individual stocks than it does to invest in an ETF. It's also possible for individual stocks to be riskier and more unpredictable than exchange-traded funds, ETFs. This is because they are affected by things that happen only at one company. You might not get the same amount of tax efficiency and diversification from specific stocks. To give you a rough idea of how the SCHD ETF purchase will do in the next 2, 5, and 10 years, I'll take a look at the past gains and the current state of the market. This would get you ready to decide right away if you want to invest or not. Now, assuming that the SCHD ETF maintains its current dividend yield of 3.2% and its annualized total return of 12.84% based on its 3-year performance, which we're certain it will, investing $100,000 in SCHD ETF today would result in a value of $126,560 and the dividend income of $8,050 after 2 years. This would be a total return of 34.61% or 15.76% per year. In that same perspective, let's look at a 5-year forecast of the SCHD ETF with its current dividend yield of 3.2% and its annualized total return of 9.51%. Investing $100,000 in SCHD ETF today would result in a value of $157,624 and a dividend income of $15,762 after 5 years. This would be a total return of 73.39% or 11.66% per year. Finally, let's look at a prediction for the next 10 years for the SCHD ETF. With the present dividend yield of 3.2% and an annualized total return of 11.06%. If you put $100,000 into the SCHD ETF today, it will be worth $287,175 and give you $45,670 in dividends in 10 years. The whole return would be 332.85% or 15.72% per year. Keep in mind that the real performance of the SCHD ETF may differ from these predictions and forecasts, just like the performance of any other investment. This is because of the market conditions, economic factors, and other risks. Before making these kinds of business choices, you should always do your own analysis and talk to a financial expert. As has been said many times, SCHD ETF is a good choice for investors who want to put their money into US income stocks that pay out regular, high-quality dividends. It lets you invest in a wide range of low-cost, tax-efficient stocks from some of the best dividend-paying companies on the market. Buying SCHD ETF is a smart investment that could change the way you plan for retirement and protect your financial future. This appealing investment choice comes with a wide variety of benefits that can persuade anyone who wants to have a successful retirement to act. The SCHD ETF is more than just an investment. It's a way to reach your financial goals because it carefully chooses 100 of the best US companies with a long history of consistently paying dividends. This means that your investments are backed up by companies that have a long history of doing well. This makes sure that your stock is stable and reliable. SCHD ETF investment is a life-changing choice for planning your retirement because it offers low-cost, high-quality stocks, a steady stream of income, and a lot of room for growth. It can be a key part of a well-balanced and tax-efficient retirement plan. giving you the peace of mind you need to enjoy a happy and comfortable life. In essence, by investing in an SCHD ETF, you're making a calculated move towards securing your financial future. This investment's quality, low costs, and strong performance are factors that speak volumes. So, why not take the plunge and invest in the SCHD ETF today? Your future self will thank you for this life-changing decision. Hit the comments section below and let us know what you think about SCHD ETFs. Meanwhile, if you like this video, subscribe to our channel and watch out for our next update. See you around.